about the annoying tapping noise in the ear, but we've been having so many problems with this mic. I just want to make sure it worked. Hey, thanks for joining us today for our live presentation. Today is Friday, and that must mean it is time for the market recap. Today's host is our own ever-loving Jeff Gibby, and our guest presenter is the incomparable, I can't think of the word I'm trying to say. Anyway, it's Oscar Carboni. Don't tell the other presenters, but he's like my favorite presenter, and I know you're really going to enjoy him. He's always got a lot to say about the markets, and he's got a lot of insight, and he's just a fun guy to listen to. So anyway, as a reminder, we are Metastock, and if you haven't heard of us, we are purveyors of charting software and premium market data for traders just like yourself. Perhaps you could take a moment right now and like and subscribe and hit the notification bell on YouTube so that you don't miss any live presentations like this. Anyway, we're going to be starting here in about 8 minutes and 56 seconds. And while we're waiting, hello, by the way, Anil, and hello, Dan Tipton. And by the way, while I'm thinking of it, go ahead and say hello as you're coming on. I see quite a bit of you are already waiting for the presentation, which will be starting in about 9 minutes. I'm going to go ahead and play our little video right now, tell a little bit about Metastock, and we'll be back in just a minute. Thank you. Hi there, Greg Lewis, Metastock Software. As the marketing director, I get asked all the time, what is Metastock? How can I help my trades? Well, stick around for about 3 minutes, and I'll tell you. Metastock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of Metastock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the Metastock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love Metastock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And Metastock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, Metastock explains how they work in an easy-to-follow commentary window. Metastock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. Metastock even has the very popular and exclusive Rahul Mohindar Oscillator System, or simply known as the RMO. And as you become a more experienced trader, Metastock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators, and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why Metastock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about Metastock and how it can help your trading, visit metastock.com or contact a product professional
via phone, email, or chat.
Okay, thank you so much. So that's who we are. That's what Metastock is. Hey, if you are not currently a Metastock customer and you'd like to know more, don't hesitate to contact a sales professional right now. Excuse me. Right now at metastock.com/sales chat. That is metastock.com/sales chat, and they will set you up just right with Metastock and market data. Hey, looks like we got a few more people coming on. We do have Oscar on the other line waiting to join us, and we do have Marcel. Hello, Marcel, who's joined us as well. Again, so many people waiting online right now. This is great. Oscar sure brings them in. Pack them in, Oscar. Okay, and also, there's one more thing I wanted to tell you about. First of all, our main event starts here in about 4 minutes. And today we're only being broadcast on YouTube, so make sure you contribute a lot of comments and questions. We always encourage that. I know Oscar really encourages questions, and also when the time comes, he often takes stock suggestions or symbol picks, so go ahead and have those handy. Hello, Lee. Thanks for joining us. One more thing I wanted to tell you about is the Traders Summit schedule just went live today. So if you go to our homepage, metastock.com, you'll see it on the top banner. It says, register for the summit. You'll see a picture of a summit, a mountain. And we have 8 speakers, one of whom includes Oscar Carboni, and that's going to be on May 10th. It is absolutely free, and it's absolutely worth your time and effort to join us. Hello, Nat, and hello, Tim. Thanks for joining us. And also, most of the presenter offer some freebies with this. So go ahead and check those out. Check out the freebies, and we would love to have you join us on May 10th for 8 hours. That is a Monday. We often do it on Saturday, but we're trying it on Monday now because it seems like more people want to attend it on a Monday rather than a Saturday. All right, we have about 3 minutes. I'm going to go ahead and make sure everything is copacetic on the other end, and if you all just hang out, we'll see you in just a minute or two.
People here are willing to line up and go get their shot, you know.
All right. Well, we're live. Hello, everybody. I hope you're doing well. We were just talking about shots. So in any case, it's good to have you here. I'm going to read a quick little legal disclaimer. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Today, I'm going to introduce Oscar. Sometimes we call him a force of nature. But I actually was talking to one of our sales guys today, and I said, you know, Oscar is one of the best guests we have to do market recap. He always has really good opinions about what's going to happen in the marketplace. He always has really good charts to share, and it doesn't require a lot of, he's one of our best guests. We love him. His website is livewithoscar.com. And Oscar, how are you doing?
Very well, Jeff. Thank you so much. How are you doing today?
Doing great. I'm sure you want to talk a little bit about the markets. Hello, Vincenzo. Hello, Ariel. Tim, Lee, everybody that said hello in the YouTube chats. Thanks for coming today. One thing I will tell you before Oscar's getting set up, if you don't mind, make sure to like and subscribe. And it does help a lot. Make sure to comment. If you don't like the video, dislike. That helps us too. But in any case, yeah, it really does help with the algorithms. If you participate, we want you to participate, et cetera, et cetera, et cetera. So Oscar Carboni takes on Jerome Powell. Let's go.
Let's go. So I've got these two little windows. I'll just move out of my way. I don't know if you can see them, but I need to move them. All right. So traders, thank you for tuning in. Metastock, thank you for having me. What a great company. I've been using Metastock since I'm 18 years old, and that was about 300 years ago, and I'm still using it now. So it's a great program, and it allows me to figure out what I think is coming next, technically, off the charts. So Jeff just mentioned that there's risk, and please know that there's really strong risk in trading futures, stocks, options, ETFs, you name it. You know, people don't recognize who trades stocks, because if you buy stock and you spend $100 on your stock, you can only lose $100, and that's risk. If you buy a futures market, you can lose thousands of dollars, even if you only started with 100 in your account. So please know that, okay? Very risky game. But if you understand that and you put your stops in, then you can probably trade these markets yourselves. All right, so Jeff, just wanted to make sure people understand, you know, that you could be hurt in these markets. In fact, with that in mind, I haven't shaved because my army has lost for 3 days in a row. It's not heard of that often, but we got hit for 3 days in a row. I'm not shaving till my next win. I hope I don't turn out to look like Moses. We'll see what happens. So thank you for tuning in. We are now going to look at what's going on, at least as far as I'm concerned. So Jerome Powell, and I'm a fan of the Fed because it's about the only rich uncle I have that doles out money when the world's going broke. So I don't dislike the Fed, but, and you know what? I could even be told I'm stupid. If Jerome Powell wants to tell me I'm stupid, I'll take that insult as well. But to tell me I'm blind, that, you know, you can't tell me that my eyes do not see what they see. It's one thing to tell me maybe I don't understand what I'm looking at, but you can't tell someone like me that what I see is not what's going on before my eyes. So I am going to call this segment Oscar Carboni Takes on Jerome Powell, and only in one way. He mentioned that we do not have inflation at this time. I say hogwash. Let's go see if we can find out why. The dollar index, we will start here. Government figures show no inflation. Personally, I'm not so sure. Behind this is my little teeter-totter. If you don't know how this works, commodities themselves, raw materials, building materials, copper, lumber, cotton, anything in industry, soybeans, is considered a commodity. and they're priced in US dollars. Now, this is a little teeter-totter or a seesaw in a park. If you've got dollars going down on the right side, commodities go up, or the price of raw materials go up. That's the way it works. There's no way to stop that from happening because the raw material is priced in dollars. If dollars go down, the pricing of the raw material goes up. So let's see if that creates inflation or not. You're looking at the dollar index. And if you ask me, the dollar index has been in a tailspin for quite some time, as you can see, right? It just keeps going and going. Has a little bit of a rally. Everyone gets happy, and it goes in for new lows. Another rally. It looks like we can get happy. Hits the 200-ball moving average, down for new lows. So the dollar dropping in price without inflation at all creates commodities pricing to go higher. Now, that does create inflation as far as I'm concerned. Let's look at a few charts. And when I'm done with this presentation, I will then answer. I will open this up to questions and answers. You can tell me, ask anything you want. We'll look at charts together. But let me show you this presentation. So we're looking at the dollar index. And let's go see what else is out there. Copper. You realize that copper is used in housing, industrial use, automotive, computers, EVs, right? You can't build, we talk about EVs, they're not just made out of batteries. You need copper in an electric vehicle like everything else that runs. Copper is in everything. Now look at copper. Does this look like a market that's been non-inflationary to you lately? I don't know. When I take this little thing and move it around and it just keeps going up, I can't call that non-inflationary. I just can't. Not if these materials are going to be part of products I'm going to pay for. I cannot look at that and say it's non-inflationary because these are the components, or copper is one of the components that is in almost everything that we use. Our phones, our watches, everything at home, computers, cars, crazy, right? So I don't know, maybe there's no inflation, but I'll continue to look at a few more charts. Look at lumber. As the costs of the components used to make consumer products rises, the price of the consumer, well, the price the consumer pays for those products rises as well. Currently, the dollar is heading down. So with the dollar heading down and the cost of consumer goods going up, isn't that the definition of inflation? 39 years doing this, I thought that's what inflation meant. I'm not saying it's hyperinflation by any means, but we're starting to see inflation. So let's look at a few more charts and see if that's true. Now look at the price of lumber. Housing has gone through the roof. One of the reasons is copper and lumber are through the roof. You need an abundance of both to build the normal average house that we build here in America. So I think housing's on the rise, of course, because interest rates are low and the price of the raw materials to put those houses together is on the rise. So looking at something like lumber, I've never seen it this high in my 39 years. I've never seen it half this high. This is the highest it's ever been in all of its life, and it just keeps going. So I don't know if we're going to call that inflation, Mr. Powell. I might, though, if I owned a building company. So then we have palladium. Most people don't even know of palladium. They don't speak about palladium, but it is in catalytic converters, jewelry, dentistry, watchmaking. I didn't even realize this till a week ago because I worked on the exchange where I traded palladium and platinum and copper, so I know what they use it for. I never heard this once until today. It's used in blood sugar test strips. That I didn't know. Aircraft spark plugs, surgical instruments, electrical contacts. No inflation? That's like everything that you do in life. The price is going up for the components of it. That has to equate to inflation at some point. And then we can go look at something like cotton. So cottons in clothing, bandages, coffee filters, everything you can think of that has cotton in it, it's in industry everywhere. And this has been going up for a long, long time. If you like what you're seeing here, please join me. Fill out an application at omnibootcamp.com if you'd like to join me here in Las Vegas live. or join me in my site. I just figured I'd mention it to you because I'm going to show you a few pretty nice charts here, and you may want to come join me next week. You can simply come to livewithoscar.com, register if you're not a member. We ask for nothing, no credit cards, nothing at all. Put in some information, and then work your way to either the trading room, of course, where I'd like to meet you, or take a look at the recommendations I put out each day in the chart below to explain why I would be buying or selling that market. The best place to find me, of course, is click Chat Live with Oscar. Follow the steps, click Chat Live with Oscar, and immediately you will end up in a live trading room that sort of looks like this one here, where there's a bunch of people in the room. We all work with one another. And I usually have a camera on, like this one that I'm using, and a microphone, so I'm live in the room, and that's free. You know, just come join me. We'll see where the markets go next week. So anyway, cotton daily bar. Cotton has been going up. Anytime that you see a market, start at the bottom left of your screen and work its way to the top right. It's a bull market. And everything I'm showing you so far, which components to products that we buy, have been going up, and not a little, going up a lot. So let's see what else we have out there. Soybeans daily bar. Soybeans is used in everything from food to car tires, whether people know that or not. It's used in industry like crazy and all sorts of foodstuffs. And look at soybeans, especially lately. Look at this thing run. So, Mr. Powell says there's no inflation. I don't know that that's possible with every one of these markets that we keep looking at going in this direction, straight up. So maybe there's no inflation as far as what the Fed sees, because they also use and used to add crude in as a huge measure of inflation in part of their calculations. Crude's not as worrisome as it used to be because we're capable of pumping so much of it. So maybe the Fed's figures aren't showing the inflation that we can easily see with our eyes here. It will catch up eventually. Let's see what else is out there to look at. Corn, ethanol, animal feed, human feed, sweeteners, the list goes on and on, right? You still see no inflation? Look at these prices. Look, once again, we're at the bottom left of my screen, and we make it to the top right of my screen. That, my friends, is a bull market. And if commodities are at a bull market, it creates inflation if the dollar is going down, undoubtedly. So I think there is inflation building. It's snowballing, far as I can see anyway. And then you take something like sugar, and everybody uses sugar unless you're a diabetic or you're on a diet. Sugar's used in everything, baking, cooking, coffee, tea, you name it, sodas, everything. Sugar has been going up just like everything else. Again, make sure you join me in my free live trading room at Futures Traders if you feel like spending more time with me. And let's see, I'll open it up to you cats in just a few more moments. I didn't want to spend too much time showing you because this becomes redundant. Look at aluminum. Cans, foils, kitchen utensils, window frames, beer kegs. Of course, we all know that. Airplane parts, auto industry, building, just to name a few of these uses. And they still see no inflation on the horizon. Look at the price of aluminum. I mean, what a skyrocket that's been. Strong looking market as well right now. So I don't know. I think I am spotting inflation in these charts that I'm showing you. And there's one more. Look at this one. Iron and steel. Look at how this has been going up. Of course, that's in everything else as well. And we have it, you can see we use it in this is a few of the thousands of industries it's used in. So when the Fed tells us there's no inflation, it shouldn't tell me I'm blind at the same time, because I can see, and I can show you 13, 14, 15 other examples now that look just like this. I just didn't want to bore us with nothing but inflationary looking commodity markets. And I thought I would then open it up to questions and answers from the basic traders out here. So if you've got questions, I'll be more than happy to start going over them with you now.
But I will report that in the YouTube chat, there's been a lot of speculation as to who does shopping for the Fed in terms of their grocery shopping. Dan would like you to look at Tesla, if you don't mind.
Not at all. Let's see what Mr. Tesla looks like.
If you guys have questions or symbols or things you want to talk about, just send them over. We're looking for them.
I have a zillion Tesla charts saved. Why don't I just go grab one of my own? Let's see, Tesla. If I remember right, I put one right here. That should be interesting to look at. Oh, yeah. Remember this from our...
I think this was from a couple of weeks ago.
Yes. And I always leave this stuff set up to see what has happened. And once again, trouble in the same place. Isn't that interesting? This was that same, if you recall, I showed everybody algorithm averages that the street is using. And looking at Tesla right here, it is having difficulty once again at that same average. So I would say this is a waiting game. I mean, the market is pretty much a bull market, but Tesla itself, waiting game. You could easily construe this as some kind of a big bear flag, a little bit unorthodox, but big bear flag. If you wanted to stretch your imagination a little bit, give that a poll. And then maybe say, is this some kind of a flag building right here? You know, you can kind of look at it that way as well with a lot of trouble by that average. So I think you have to wait to get past this average and past that top line up there, Dan. I wouldn't be buying it yet, if you're wondering.
Magic Hand wants.
Oh, go ahead. Sorry. Interesting to see that average is still working.
Yeah, it is. Magic wants to know, in an inflationary environment like this one, do you recommend buying and holding for long-term positions?
Depends on what you're buying. If you're talking about the stock market itself, this isn't going to chase the stock market down, not for quite some time. It'll hurt us in our pockets. The companies will raise prices of their products. You'll pay more, but they won't feel it for a while. There's a whole cycle that will take place before companies feel it.
Gabby wants to know what hours the room is running.
Well, the way the world works, the markets are open 24 hours a day, and so is my trading room. I am there for as many hours as a human can possibly be, whether I'm on camera or not. I'm still there reading and typing. I allow my traders to sleep while I stay at the watchtower to make sure that markets move. So it's open basically 24 hours a day.
Edward has a comment that says, why is lumber up so fast? Aren't there a lot of trees? Will this squeeze 8 Home Depot margins? Home Depot is in SPY. There's a lot of ETFs. So there's a few things to unpack there. Aren't there many trees to make more lumber with? Is it going to squeeze HD? And is that going to have effect on the market?
Let's go back to that lumber chart. So at least we have lumber in front of our eyes. So low interest rates has spurred a whole new generation of people who a couple of years ago were saying, we're not going to buy houses. We're the new generation. We're apartment dwellers. Well, those kids have changed their minds. They've gotten a little older, and they're buying more houses than we can possibly put up. And the lumber to supply the building industry cannot come in quick enough. And we've got tariffs on lumber mills and stuff going on with Canada on purpose because they were beating us over the head for so many years. So the price of lumber shall continue to move higher until the real estate market cools off a little bit. So yeah, I couldn't imagine that slowing down right now. And, you know, funds are not blind, if you will, Mr. Jerome Powell. Funds are not blind. Funds can see when a market is in a absolute direction, and I guarantee you they're in lumber as well. They must push it up as well. Maybe not that they stay in it full time, but I'll bet they goose it up because why not? The market going in one direction. So I think it'll be a while. Now, does Home Depot feel the pain? Well, I bought a $68 piece of wood there the other day that I paid $28 for the last time I bought one 3 years ago. I think we feel the pain, and Home Depot goes, whew, got away with another one. So when another customer paid the bill, thank you, Oscar. So yes, it must squeeze their margins a little, but right now they're passing it along to us. And they know the government gave out a lot of money. People are willing to spend it, so they'll pass it on to us, I assure you.
Let's see. Marcel wants to know if you look at two stocks I'm holding on to, Love and Disney. LUV Southwest and DIS Disney.
LUV. Let's see if we can. Is it a .o?
Nope, it's right. Just LUV by itself.
What?
Click on starts with there, and that'll help you in see where it says starts with. There you, and then take out the dot. There you go.
All right, so let's go like this and put the Wall Street's favorite averages on it. And wow, nice chart. Southwest Airlines, have to tell you, I wish we knew who their traders were, because back in 2008, they were smart enough to hedge and made zillions of dollars during the crash. And look what they've done after Corona. I mean, this is during Corona. The whole chart is here. They've done really well. They must have great traders there. That chart looks fantastic to me. I couldn't possibly imagine not buying pullbacks there. And as you can see, they are firing away off of a very simple 50-bar moving average here. Right? Pretty much when it gets there, we can even pull the 200 out so it doesn't confuse. When you get to that 50 in Southwest, from what you can see, they seem to, like that spot. And that's where we are now. Let me just label the chart. So that's what I see there. I can easily spot a channel right here, or a crazy Oscarism flag, if you will, an F flag. But, you've got this whole piece right here doing something. And whatever that is, it's working itself out right now, but it's dropped right down to that lovely algorithm style average down here. See the blue line, right? It goes right to the spot where they started buying. So you're at the bottom of a channel at the average. Looks to me like it'll go back to the top of the channel.
All right. And then Disney.
All right, we're doing
DIS.
We've been here before. But let's just drop some averages on there. Well, that's not nearly as pretty looking. So, as you can see, algorithms aren't keying off of the 50. This is the simple 50-ball moving average. It's obviously another average because it goes too deep through it. And I'll bet you if I spent 5 minutes, I can tell you what they're keying off of. But looks to me like they're keying off of something else because it cuts through. I don't know. It doesn't seem right. But what I see here, let's move this stuff away and not worry about averages for now, is this doesn't look very pretty to me, the way it's making this whole nasty thing going this way. Whatever's going on there, it seems to be running into resistance below that average, even if you want to call it something that they would use. But more than that, if I usually can spot what trend lines look like just with my eyes. I can sort of shoot them across. Watch how it falls out of this trend. All right, let's get rid of these lines so not to confuse. So it falls out of whatever was happening here, which was looking pretty solid to me. Right? Let's just make that line look a little more correct. It's something going on all across here. Something inside of here. I'm not trying to make anything direct that I would sell from, but just letting you know it was in a nice channel moving up, and it fell out of that channel, and now it's sort of building more of a channel heading back down.
I just figured out why it's dropping.
Okay.
Dan's headed there. Next week, so people are shorting the stock. They're afraid he's going to cause some damage, I think.
So just bring room damage. You'll be fine, Dano. Bring room damage money. So But the other thing is, now let's move back and not look at what we think right here. Let's cut this away for a moment, and let's see what the characteristics of this chart are a little bit. So what does it do when it makes these little weird pullbacks? See what it does afterwards? Heads back up. So maybe that's all it's doing right here. I would certainly have to run my Omni to tell you more. But here's how I would look at this if I was going to say, you know what, Oscar, would you put your money on this? I would say no, not on the long side, because that is some weird bear flag that took place. Let me parallel this and I'll show you what I mean. That's some kind of weird bear flag that took place, and you're now breaking down from it. I would consider this whole thing the pole, even though it's unorthodox, works for me. So I would consider that a flag underneath the average. At the bottom of it, if you break under the flag, ugly. If you stay in it, maybe you last a little longer, but that is a bear flag then, just so that you spot that. That differs from what happened here. Right? That's completely different. That's a drop and then a flat, which generally shows a flag. Then, of course, you can even get a little crazy and wonder if, like Russell and many other markets, I realize that we're making new highs, and there's a lot of money in the economy, and the stock market should make new highs. But for some reason, while it's making new highs, it's showing a whole bunch of really weird bearish formations all over the place while it's making new highs, which is sort of odd. Because I can easily say, in my mind, I would consider this the possibility of a head and shoulders building. We'll just grab this circle and make use of it up here. Maybe we're getting ready to start forming the right shoulder. So oddly enough, I can show this to you in a bunch of stocks and indices, NASDAQ, S&P, Russell, that are going up, but still producing weird bearish looking signals. Because this could easily be the beginning of this starting at Disney. I wouldn't imagine fundamentally that would happen, because we're just opening up, right? The economy is just opening up. People are going to go to Disney. Mm-hmm. So oddly enough, we're seeing a bunch of weird bearish signals in a very bullish market. Whatever that means, who cares? I'll just deal with them. But so you can see that it's getting slightly tricky out there, not just for us, fund managers. Everyone's getting a little bit tricked out lately.
Well, I hope Dan has fun. That's the one thing I can predict with 100%.
The more you spend, the higher that chart goes. You know how this works. So spend some money there.
Let's see. Tim wants to know, Oscar, what are your S&P projections for this year? This first and that elusive second level.
First level, 4260. That's not right. 4260. ES. Second level. Can't tell you yet. It's on my whiteboard. It's been there since the year started. If we hit 4260, I will then give the next one. Let me just tell you this much about it. I'm embarrassed to produce it. It's so much higher than we are right now. I'm almost embarrassed to produce it. So once we hit 4260, I'll have the guts to go, okay, you think I'm crazy? Here's where we go next, and I'll give out the second one. It's one of those. So I was yanked off of a television station once. I was given an opportunity to go on CNBC and speak about crude oil. And they asked me what I thought about crude, and I told them I thought it was bearish, and they wouldn't invite me on. And a few days later, I got an email, Oscar, what do you think about crude? You want to be on TV? Sure, I'd like to be on TV. I get the email, what do you think? I think it's going down. No interview. Third time, I get an email. They say, Oscar, you want to be on TV? Sure, what's the topic? They write back, crude. I write back, what do you think? And they write, what do you think to me? And this time my answer is, I don't know. What do you think? And I send it back. And they write back to me, we are bullish. And I write, well, what do you know? So am I. I get the interview just like that. I agreed with them. But that's not what I was about to say when I went on TV. So I get on TV and I say, well, you know, Melissa, at first you would think crude's going up, but I've got unequivocal technical proof to show you that crude not only is going to go down, but it's going to drop from $103 a barrel to $45 a barrel. And right there, she stopped the set. The vaudeville hook came out. She called me a nut and threw me off the set. And as I was leaving, I said, Melissa, listen, I did not give you a prediction. That's for crazy people. I gave you a projection. I've been doing this my whole life, 34 years at the time when I worked with her. I said, I was there when crude oil opened up. The mayor cut the ribbon, and the ribbon was cut. And we walked in the crude pit and traded it for the first time ever. I've been around crude that long. I'm telling you, it goes to 45. She threw me off the air. A year later, she brought me back on TV and apologized because crude hit $45 a barrel. So I understand about getting yanked off television. But my point behind that was what you see on TV is might not exactly be what's going on. You don't get the invite unless you agree with the TV station and what they want
to fit the narrative.
So they don't tell you what to say. They'll send an email to me and you and you and you. And when one of you have the opinion of them, you get the interview that day, even if you don't know what you're talking about. So watch what you listen to out there. I've been on TV 80 times. I kid you not, maybe more. I know how this game works. From that day forward, when I went on TV after that, the first question they would ask me is, Oscar, are you going to behave? Oscar, are you going to behave?
We've never asked you to behave. Hey, I'm just saying we've never asked you to behave, right, Oscar?
No, you guys are great with me. So I'm not putting down CNBC or any of those stations. It's what they need to do to get the data to move smoothly so each other person is not opposite of what the last guy said. But for someone like me, I pull it directly off the charts. I cannot agree with anyone but the chart. I mean, if the chart doesn't say it, it doesn't exist.
Okay. Abdul over says, Oscar, you are a gift of God. God has chosen you to help small traders. You are honest and clear to talk. Well, that's a pretty good compliment, I'd say.
Goodness, then I'm blushing. If you can't see through my beard, I'm blushing. Remember, 3 days. I'm not shaving until it's over.
Dana wants you to look at J&J because the CDC just okayed the J&J shot.
That's interesting. I like that. Get a little space in between. J&J. I know I already have a chart, but I'll just pull a fresh one. Didn't suffer any damage at all, huh? I mean, a little bit, but they got right back on their feet. You know, I have to say, Daniel, it's not a chart I would trade. I don't like anything about it. Yes, it probably will continue to go up. It's Johnson & Johnson giving out shots, but I would, if you asked me to come up with a trade for you on this chart, I would ask if I can find another.
How about something else? Right?
Good. Yeah, if you look, things don't. The only thing I see that works on this chart, and I see two that work, one after the next, are inverted head and shoulders. If you don't see them, I'll point them out to you. It's the only two things I see on the whole chart that work. Everything else looks wrong. So if you don't see them, I'll just point them out to you very quickly. You have inverted head and shoulders right here. They work well. Let's make that a little prettier. So I think that these are about the only characteristic on this chart that I can spot without sitting and doing a ton of analysis to see what I see. All right, there. All right, so it worked. Inverted head and shoulders, the opposite of an upright, and the market does move higher. And then you put another one in right here, and the market does move higher. But then after that, there's not a lot of good going on. Wait, the shoulder is a little bigger. The shoulder encompasses all that stuff right there. And then you grab the shoulder here, and voila, another one. Those work. And in fact, maybe this is a little one right here. So maybe it'll happen again, but that's about the only thing I would use that chart for until it finds another cycle that it goes into. Let me just label that for you. All right, anything else? Well, so let's find out. Dano, that was Dano that asked for J&J?
That's correct.
Look, this would be considered a bull flag. Let's see what it does. See right there? Well, I made it too big. That would be considered a bull flag. Right there, there's the pole, there's the flag. Let's see what it does. Maybe it'll actually behave and go up. But I don't really see any of those types of things working at first glance except for the inverted head and shoulders.
Here's an interesting one. David wants to know if you can help him with identifying support and resistance levels.
Absolutely.
He's having a difficult time.
What chart are you having a difficult time on?
David, do you have a chart you want to look at? Dan says, I see lots of Mickey Mouses, but you probably see that everywhere right now, Dan.
He lives by Disney. It's all he ever sees.
Let's see. I'm kind of curious. While we're getting a symbol from David, if you want to put in a symbol, please do, David. I'm curious to see what you think about oil right now. And Edward says that CNBC oil call was monumental.
Ah, thank you.
And I've seen that video because we've done a lot of. That was a pretty impressive call.
It was pretty gutsy for me to go out there in front of TV Land to do that. But, when I find it on the chart, because I didn't surmise it in my head, I'm very brave to show it because I know the chart won't lie to me. If I read it wrong, that's one thing, but the chart will be right. If I surmise something, I'm as bad as everybody else at that point. So, crude oil, fresh, we'll just bring it up fresh. We won't look at that crazy head and shoulders right there. Crude, of course, is priced in dollars, you must remember. And if crude is priced in dollars will continue to go down. There's no way to stop this from moving higher at some point. But this line doesn't belong here. What's troubling crude a lot lately is this line belongs here. See that support? And if you parallel that, you can see that it was in this for quite some time. And since you've fallen out of it, crude's had nothing but trouble. I'm sorry, I can't seem to grab this line. So basically, you were in this thing right here, somewhere in between there the whole time. Fallen out of it dramatically. Let's cut the average away. You've fallen out of it dramatically. You can easily call this a bear flag. Pull here, and we'll make this a little thinner for you so it doesn't get in our way. And then some kind of crazy flag took place right here, which it's being challenged at the moment. And if you can't get above that line, which it's having trouble doing right now, that will end up being a valid bear flag, and down crude goes. Of course, crude's got to fight with a dollar moving lower. So you got to, then of course, the chart will tell you which way to trade, but then you've got all this craziness like supply and demand and all that, all the outside factors that show up on the chart in order to calculate. So people who do trade crude, if you're going to read about crude and calculate how much crude there is and how much we're making and how much we're spending and how much crude is being bought around the world, you'll never figure out where crude's going to go next, ever. There's just too many factors, and the traders or the owners of crude oil extraction companies are getting it at a fixed cost. No matter what the price of crude is on the open market, let's say they were smart enough to get it out at $18. We'll just throw a number out there. Well, they keep pumping it at $18 and the price of crude keeps going higher. Oil companies, you could never lose. They don't lose ever because you get it out of the ground, you sell it forward. If the market drops, you get out of the short position. You still have the crude. You made money on the trade. And if the market goes up after you short, you deliver the crude, which you got at $18 and you sold it on the open market. So crude's one of those markets you could never figure out through the fundamentals exactly what's going on. So you have to let the charts tell you. And the chart, of course, I've shown this to people in the past. It started with a head and shoulders. You got a shoulder here, a head, and another big shoulder right here. Likely head test is taking place. And the next thing should be downside. Of course, we'll see what the dollar does. If dollar going down too fast makes crude buoyant. The beauty of what Omni does is it day trades. It doesn't hold positions, so I don't really care what crude does on any given day. As long as the night before, if I'm going to trade it, I've come up with a plan, and then I've acted that plan out on the next day. Luckily, we day trade.
Pat wants to know how long you see the dollar going down.
You know what? The dollar can probably, let's look at it like this. Let's pull up the chart. You know it was in here somewhere. Okay, right at the top. The dollar, obviously, its next move, if looking at something like top to bottom, doesn't quite make it to the top on its first attempt, but then goes all the way back to the top. So you'd have to think eventually dollar ends up down here somewhere in the 88 level, but then time will pass. So it's 88 or lower now. Let's see what that comes in around. Let's bring this up and we'll find out. So we're coming in at around, if it dropped tomorrow, straight down like a rock, your support, well, the next bounce is at the 87 level. But you must recognize it's going to take time to get down there, right? So let's say it takes 3 months to get down there. That would be the distance between here and here. You see how much more downslope has taken place. That will happen here as well. It won't be 88 anymore or 87 by the time it gets down there. It'll be more like 82, 81. So, or maybe 85. I don't know how quickly it'll drift. But as you can see, because we're on a sloping angle, if it continues to head towards the bottom line, it gets worse as it tries to make its way to that bottom line over time. So I think the dollar will continue and make its way back down to the 87s at some point. Now, of course, the dollar, you must realize what the dollar, if we raise interest rates, and the Fed does not have to raise these rates, by the way, if traders sell bonds, interest rates go higher inherently. I don't care if the Fed stands on their heads. You sell bonds, 30-year and 10-year notes, rates go up. If rates go up high enough, traders from all over the world or usually sovereign funds from all over the world come in and grab our dollars to invest in our interest rates. That sends the dollar back up. So it will never be straight down. It's not how the dollar works. It'll always fight its way down, and we've got the Fed that pulls levers to make sure it doesn't go straight down. But I think you will see that 87 mark at some point.
Okay, David. David was the one we were talking about with support and resistance and identifying support and resistance levels. He wants to look at FTSE 100.FTSE.
So it's .FTSE.
There you go.
Move on. So they've cut us off here in the U.S. We don't get these quotes anymore. Most of our platforms do not supply the FTSE quotes. I used to trade that as part of my daily life, but not in the last 6-7 years. So FTSE looks fantastic as a market itself. I can't stand the chart. I wouldn't want to have to trade that chart, come up with daily trades on it. But I think the chart itself looks great here. Breaking out of whatever, well, let's call it here. Breaking out of whatever this thing was. Let me just see if I can make it quick for you guys. Breaking out of whatever action was happening here, I think this is where that belongs. So the next level, take it up to here now, right? Looks like it'll break out of that too. So I think it's strong. Whatever's going on in Europe, your FTSE looks fantastic right now. And if you guys don't know how this works, anything that you think you can call a head and shoulders this small, and there is one here, any head and shoulders that's this small, you'll never find this in any books. I kid you not, the books have it completely wrong. I can certainly correct 1,000 books right now. It's a continuation pattern, not a topping pattern by any means. When you see a very small head and shoulders, that is continuation in the same direction once it's developed. So don't confuse a massive head and shoulders with a continuation pattern. So I say that goes higher in the end when it's finished making whatever it does over here.
Oscar, if you need anything from Europe, I can hook you up, just so you know.
Well,
just let me know.
Thank you. What could we use first? Send some Omniacs to my OmniCamp.
Okay. Hey, I would recommend OmniCamp. I've been to a few of them over the years, and we always go and do a little bit of a Metastock class. And I wholeheartedly recommend OmniCamp. How's that for a testimonial?
Thank you, sir. OmniCamp is a 4-day extravaganza held here in Las Vegas in my home office for 3 people at a time. So there's nothing on the website about it except for an application. You'd literally have to call me in order for us to discuss it because I'm very choosy about who spends 4 days in my home.
Tim wants to know, Oscar, the New York Stock Exchange had the lowest volume for the year today, while it had a very bullish trend. Does that seem like an exhaustion day to you? So what you would normally hear from any stock trader is that a market that goes up on low volume is probably coming back down.
That's what any stock trader will tell you. I will tell you that from what I've learned about volume, that doesn't seem to apply like it used to. Because they may have been doing a ton of options somewhere else, or may have been hedging against that in another market, and they did more volume there than you might imagine to hedge their position that would have been trading in the S&P if it wasn't Monday or Friday, I should say, this week. So, I have to say, I do not use volume the way I used to. I was a big volume trader for a while. If volume moved, then I knew it was time to do something. But I'd be watching all of these derivative markets that have opened. I recognize that volume you see in one market could literally be on purpose to fool you so that you don't see what a big hedge fund is doing on the opposite side of it. So I'd rather look at the chart than volume these days.
All right.
Anything else, guys?
I'm not seeing. Let's see. Let me kind of scroll up a little bit here. Magic Hand Puppet, I'm sure that's his real name, wants to look at GDX.
Which one is that?
GDX.
GDX. I know it. I know GDX is that should come up right there. It's the gold one. So GDX looks a lot like the gold chart, doesn't it? As it should. Looks a lot like the gold chart, and as ugly as the day is long, as far as I'm concerned. I mean, look at this whole piece right here. This nasty piece, the whole thing. So if you can stay away from it, that'd be fantastic. But I'll bet it drops back into it. And this is very weighted in dollars too, by the way, because it's got to do with the price of gold, and the price of gold is opposite dollars. So if you can get gold to move higher because dollars are moving lower, this will move up as well. But I don't like the chart.
Okay.
Nothing I would.
CAR.O.
Well, look at that. I think we looked at this about a month or so ago together. Do you remember? Somebody asked me.
Mm-hmm.
And we talked about how, of course, how could you not expect them to move higher? But my goodness, did that move higher? I wasn't expecting that. Fantastic. Stay long. If you're in Avis, stay long. So, literally, if you can see why, you just broke out of. So you had an interesting thing. You dropped out of an Oscarism F flag, did the damage on the downside, and quickly recovered. Really interesting. Quickly recovered. The damage was almost nothing, and look at that, straight back up. And that is updated till today, isn't it? Sure enough.
Yeah.
Wow.
Yeah.
Fantastic. Well, let's see what that looks like on a weekly. Woohoo! What more could you ask for if you long that, huh? Stay long, whoever asked for what I think of that chart.
Let's see. Paul wants to know if Bitcoin recovers, does gold go back down?
So, interesting question, because I cannot seem to find a correlation with or against gold. Let's see. I think April is active right now. Bitcoin and gold, I have searched. I mean, I watch a ticker board all day long with 50 tickers on it, 65 tickers on it, and I look for correlations. Gold's moving with dollar. It's not moving with dollar. Gold's moving with whatever, soybeans, whatever correlations I spot. I have been trying to find a correlation between Bitcoin and gold. I cannot find one, not yet anyway. So there is no answer to that as far as my analysis is concerned. What I will say is that if we could do a continuous, how can we do a continuous on this Bitcoin?
Let's see. So what was the symbol you used? Take out off
J1.
BTCJ1. So do BTC lowercase c1.
Lowercase c1. Got it. And nothing came up. Oh, get rid of the J.
Yeah, I think so.
Get rid of the
yeah.
J.
Mm-hmm. That should give you a continuous based on X.
What I wanted to show you is that one of the things about Bitcoin, it's a long-term holder, and if you are patient, it has its moments. Watch. If you're patient with Bitcoin, it will have its moment. right? And then, of course, it comes down, but it never gets cheaper. Well, lately, it doesn't get cheaper than it used to. So then it spends a long time going down, and then it has its moment and spends some time going down. Very, very volatile. So what I have noticed is from where we are now, and you can look back for the whole length of this chart, it just keeps doing the same thing. So we're putting in one of those really long flats that we keep seeing along the back of this chart. If I go back, I'll show them to you again. Put in that really long flat, and then it comes down a bit, right? It finds ground and starts the new charge. Keep this in mind, this picture right here. See that picture? Now, if we just move forward, it's basically what we're looking at right here. Same thing, a little bigger, a little grander, but same thing. So once it catches itself, it's just going to go the other way.
All right.
So I've learned to trade Bitcoin long term. You can try and day trade it, but you know, even your dead grandparents have heart attacks when you're in that market. So you have to be careful.
Gary wants to look at okta.o.
okta.o. Let's see what we got. Well, right off the bat, you notice that we're going to challenge a triple top, right? Let's just put it different. All right, so. Oh, good. All right, so check this out. Talk about repetitive. Look at this pattern right here. Top one, top two, top three. Pull back into this weirdness, and away you go, right? Look at this right here. You got top one, top two, top three is about to hit. You'll come back into that weirdness because this, let me see if I can point out, this is this. What you're seeing here is what happened here. Oh, excuse me, what happened here. So now we got to wait for the third top to hit, and you got to wait for this to repeat after the third top hits. That's what I'd be looking for, because barring that, I don't know what to do with this chart.
Okay.
You see what I'm getting at, though, right? Mm-hmm. Those are like repetitive patterns right there. Triple top, pull back, break out. You're about to hit a triple top. You need your pull back and your breakout. But in between top two and top three, you had this. Let me get this out of the way. Well, in between top two and top three, you've got this. It's the same thing. Interesting, right?
Yeah, I also learned the term weirdness. Dan wants to look at Netflix, NFLX.o.
They sure did get beat up, huh? Let's go. Boy, oh boy, and look what they're under now. So generally, as you can see, and it goes back further, the 200 ball moving average has a lot of history with Netflix. So in fact, so does the 50. Let's put them both on. So let's start with this one. Goodbye. This 200 ball moving average, how many days do you see it get below? Can anyone count? How many days do you see that, Jeff?
Let's see that one. The one that you circled is 1. The one after that is maybe 2?
No, because the settlement is above. Look, it got down below but closed above. Now, how many do you see here?
Well, is this a trick question?
Something's not right about that, is it? I know it's Sesame Street style, but analysis kept simple can tell you a lot of good things. So you've had that break. You're now below the 200 ball moving average. I assure you that we are not the only people seeing that. So what you have to watch out for is getting below this plateau right here. See the plateau that you're in? If you now drop below that, I think a whole down wave would start, just like the up wave that took you there. And that comes in at around 460-ish. Right here is 460. So as you can see, once we got above this area, at first it gave it trouble, right? Couldn't get above. Got above, tested it, it held. Then it just held. Didn't get back to it until now. It's on its way. What will it do when it gets there? So we'll find out soon enough, but it looks like it's on its way.
Greg Lewis wants to know if he should go to livewithoscar.com.
Craig Lewis, if you would like to join me and hang out with me in a trading room that looks a lot like this one where I can type or I can speak on microphone and you guys can do the same, then I think the best way to get there, and if I could find it, I'll just pull it out before your eyes, and would be, oh, here it is, I'm sorry, would be to go to livewithoscar.com, yes.
I'm going there right now. I'm on my way.
That is here. You can join, very easily, as I mentioned to you. Just join the site. If you want to go to the site itself, when you first get there, it'll look like that. Or I should say, it will look like that. And of course, either log in if you're already a member. If you're a member, you'll be logged in.
Time to point out, I've been to the Carboni compound, and I highly recommend it to anyone.
Well, thank you so much, sir. I would like to thank everybody for showing up today. Thank you for tuning in. I hope I'm able to help understand how charts work, and maybe you can use these methods going forward. I'm very reachable at livewithoscar.com in my trading room. I'm not afraid to give out phone numbers. You can call me at 702-629-4755. I spend my life in a trading room watching trades and watching markets. You can spend yours with me as well.
All right. Thank you very much, Oscar. Great job today. And to everybody that came, I hope you enjoyed it. I hope you stay healthy, stay well, and we'll see you at the next one. Thanks, Oscar. That was great.
Thank you very much. I enjoyed it.